Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks surrendered early gains on Thursday as worries about a prolonged US-China trade war and rising loan losses at regional banks ignited concerns over credit quality. And stocks were down bad, particularly here. Financials through and through. Financials took it on the chin after what we saw with some of the earnings of regional banks. We'll talk about it. That was the main driver of what took markets lower today. However, there was also a couple of trade news that the markets didn't like, and through we were red. Comm services was red across the board. Even defensive sectors were red, although they did outperform. You could see a healthcare, we see a bit of green. Consumer defensives, if you exclude the growth component of like staples, very, very green. So definitely a defensive rotation happening. And then we had some green in the tech space. MU, there was some news regarding that. CRM was up 3.8%. Oracle had some AI news as well. We'll talk about it a little later on. But the rest of the mega caps, Tesla, Amazon, Apple, Microsoft, were down in a very big way. Microsoft, Nvidia did help the semis along with AVGO, but all in all, it was just a red day. Every single sector lost today, guys. I mean, technology on the back of Nvidia was flat, right? Real estate was flat, but everything else fell. The S&P 500 was down 0.74%. The RTY was a dumpster fire, down 2.04%. And the worst performing sector here was the XLF. The reason why the RTY was down this much has to do with the fact that regionals make up like 20 to 30% of this index, regional banks, right? And so when you get regional bank loan losses and concerns, financials are going to dump, small caps are going to dump. And as a result, it took the entire market down with it, but it was really value, particularly mid-cap value, small-cap value, which is where a lot of those regional banks are positioned. They were down 1.68%. Large-cap value, just because a lot of the large-cap banks are solid, was outperformed the rest of the market. And then we saw core and growth fall as well. Now, ultimately, we'll talk about the regional situation a little bit later on, but what also didn't help markets today was a trade war. Trump came out and said, we're in one now vis-a-vis a trade war with China after China's decision to restrict exports of rare earth minerals on October 10th triggered a round 2 of tit-for-tat actions. So I think we're going to get this type of escalation, de-escalation with this trade war. I know the administration came out and said, we're not looking at the stock market. I guarantee you they are looking at some form of a market. It's probably the bond market. And if the bond market reacts poorly to all of this, China's going to react. The US is going to react. Trump is going to react. So keep on the fact that we're going to see a lot of escalation, de-escalation, and volatility because of the trade war front. But ultimately, right, this should be a dip buying opportunity. And this volatility is what you want, guys. Now, we also got some news that Trump and Putin agreed to meet in Budapest to seek an end to the inglorious Russia-Ukraine trade war. This is actually a good thing. This is actually a largely good thing. And the markets totally brushed this off because what the markets were really focused on today was regional banks. Now, the regional banking ETF, ticker symbol KRE, was down 6.23%. And in case you're wondering why, right, ticker symbol Zion and WAL both disclosed today to their investors losses tied to suspected loan fraud. Zion took a $50 million charge off at its California bank and trust unit, while Western Alliance said a borrower failed to post collateral but kept its 2025 outlook unchanged. And the market just doesn't like this type of stuff. We do know that when it comes to private equity, private credit, there's a lot of concerns going on right there. And this could be the start of what could be a regional banking crisis. As a result, stocks fell on the back of this news because it's kind of big. For the most part, we've brushed off credit quality concerns, but the second credit quality concerns rear its head, people get flashbacks to '08 vis-a-vis stocks fell the way they did. However, in more positive news, Oracle was up 4.22% after it said it expects its cloud infrastructure revenue to reach 166 billion by fiscal year 2030. As a result, AVGO and some of the semiconductor names were also up on the back of this. So Oracle had its Investor Day, very positive outlook. The market likes it. And ultimately, this is why you want to buy the dip. I made a post here on Twitter. Go and follow me on Twitter if you haven't already, guys. But pretty much, I came out and said this bull market will end when OpenAI stops spending. Deals have just been announced, so we're still early. We're early in the cycle right now. OpenAI also has $100 billion guarantee from Nvidia. So of the $1 trillion that they need, right? They have $100 billion guaranteed. They need to find the other 900 billion more. Between now and when they are capital drained, you want to stay long in this market. Dips are to be bought. And guys, this isn't going to be something that's going to take 6 months to a year. This could be stretching out to 2030, maybe even beyond that. So if Oracle can post its $166 billion figure that it's proclaiming, the market will continue to rally, but it's all up to OpenAI. We also did get some more semiconductor earnings. Taiwan Semi reported really good earnings, revenue of 33.1 billion versus 31.5 billion estimate, EPS of 292 versus 259. That was the street estimate. And they actually did raise their guidance. So the street was expecting $32 billion. The guide came in at 32.2 to 33.4. So the street's guide was at the bottom end of their guide, and North American customers accounted for 76% of total revenue, operating and gross margins both up 23%, 2 to 3% year over year, and CapEx continues. So great earnings here. And that is why some of these big semiconductor names actually fared okay in today's regional banking crisis. You know, AVGO, regional banks, Oracle, regional banks don't affect those names. And then we also had Charles Schwab. They came out, reported their earnings. In fact, the stock at one point was up like 3.4%. In fact, they smashed EPS, smashed revenue, right? They crushing margins right now, reduced their debt. This was a great earnings report. It just fell on the back of the market right down ever so slightly. But all in all, this was a great report. And I think you want to buy the dip right here. I think this is a $100 stock in the very near term. And then for everything we saw today here, guys, there was 1,600 advances, 4,700 decliners, terrible market breadth. We saw net inflows in the New York Stock Exchange, outflows in the NASDAQ 100, S&P 500 was red today, and market momentum not looking that great. We've lost the 5-day, 20, and the 50-day. Right now, the longer-term averages are holding this market together, but we are on the precipice here, right on the 50% mark. Not so much on the 150 and 200 day, but yeah, if we lose the 100 day, things can get very, very ugly in this market. Now, there's no two ways about it. This is extremely ugly price action right here. The S&P 500, the NASDAQ 100, the RTY, the equal weight, just very, very ugly action, particularly in the mid-cap space, right? Regional banks really, really hurting this market. It's a red day, and the price action we'll talk about, it doesn't look too constructive. Growth and value fell. We also saw the same type of momentum globally in China and the Middle East. I mean, look at Europe, up 0.68%. Europe is a big financial center. They have a ton of banks right there. I don't know how Europe didn't get crushed on this news, but Europe outperforming. India was up 0.49%. Crypto really took it on the chin today because people getting flashbacks to SVB, the banking crisis that happened in 2023 regarding cryptocurrency. And then with the macro, right, volatility ticked up. Yields were down in a big way. The dollar was also down. TLT was up in 0.86%. So because yields were down, treasuries actually soared. And when you have a banking crisis where, you know, the solution to that is print more money, inject more money into the system, you know, give these banks capital, gold and silver were up in a big way. You'd think crypto would be up, especially Bitcoin, but no. So Bitcoin and Ethereum, it looks like these are more risk assets more than they are like safe havens. Crude was down 1.3%, guys. So let's actually look at the S&P 500, and the chart does not look constructive at the top here. You look at the weekly chart, things are looking really, really good on the weekly chart. And ultimately, you want to remain bullish in the weekly chart. And if we do get a pullback, right, I think here, the 6130 area, this is a great area to go ahead buy the dip. So on the weekly chart, if we get to this area right here, this is probably where you want to go ahead and buy that dip, looking for that end of year rally. We'll see if we do get there though. However, when we go onto the daily chart and zoom in a little bit, right, you can see things are not looking too good. I mean, we came in, rallied, right, put in an all-time high. That's what we got right here. That's an all-time high at the highs right there. Then we have this massive sell-off on the back of the trade war. We tried to bounce and we simply couldn't. What happens is we put in a lower high right here. So we put in an all-time high, lower high, right, in the context of breaking some of these key low levels. So we got a high, right? A low, a lower high. And now ultimately what the bulls need to do is hold this line right here. If the bulls can't hold this line and the bears ultimately are the winners and we break below, right, it probably means we will go lower. And ultimately, if we do probably break this neckline right here, call it the 6,500 area, we could start seeing levels near the 64, 6,300 area, potentially the 6,130 area. But yeah, this is not constructive price action when you look at the S&P 500. Ultimately, you want this high to be retaken out. If we can hold these lows, we can continue. But yeah, this is not constructive price action. You can see the bulls and bears are definitely fighting between what to do next. But today, the bears certainly won because they had the news to move forward. The Nasdaq 100 looks slightly more constructive, in my opinion, but still looking very, very ugly, especially not having gone and retaken that high. The LTY actually did go ahead and retake that high. You see, this is the Carif Tantrum sell-off right here, this red candle. Then we go ahead, break those all-time highs, hit an all-time high, and now we're pulling back. We'll see what happens with the RTY, but, with the amount of regionals in the Russell 2000, we don't know if this is an isolated incident or if this is super widespread. We had JP Morgan and their tricolor division speak about what's happening in the regional side or the private credit side. So I think as earnings season unfolds, we're going to get a lot of color with regards to that. We know it's not impacting the bigger banks, and ultimately that's why you want to stay constructively bullish on the bigger banks, right? But there could be some real concerns with regionals. If we look at the equal weighted S&P 500, it looks like the S&P 500, it's not that constructive. Mid caps as well, and then small caps, right? Not too constructive. So really, the RTY looks constructive, but we'll see what happens with regards to that. European stocks continue to outperform. This looked absolutely golden. You could see this looked like a very clear uptrend here in the European indices, put in a higher low relative to this low right here, and we'll just continue to move higher. Very interesting. And that's in the context of us actually like breaking out right here into all-time highs. European stocks might actually hit the 600 mark. This is the XXSP or the STOXX 600 index. Very interesting stuff. The KWAB was down 0.64%, even though the regional banking crisis doesn't really affect China. You can see that we're sort of somewhat putting in a low right here, but it does look like this China ETF probably wants to move lower. It has been one of the best performing ETFs year to date. If we go on a year to date return basis, right, 34%. So maybe we do see a bit of a pullback here to this like demand zone at this level. Yeah, we could probably call that level, 35-ish. And then we make the next move up there for Chinese stocks. Bitcoin, not constructive. It looks like we're breaking below this 109,000 level. So ultimately that does bring us back to probably the next support, which is 100K. We'll see though, because sometimes Bitcoin tends to like leave these massive wicks, sort of like trap a lot of the buyers that would sell on the break here and then rip to the upside. We'll see what happens. Ethereum below the 4,000 mark. We're trading inside this range right here, but again, putting in just lower lows in the context of also just lower lows. We'll see if we can find support right here and move up, but not constructive price action when you look at this in aggregate. Ultimately, it does look like people are selling cryptocurrency. People are maybe saying, hey, the cycle could be done. The 4-year cycle for Bitcoin could be done. We'll see where it pans out. I am constructively bullish, very long time on both Ethereum and Bitcoin, and do think that if you want a levered play to this, look at symbols like BMNR, which was a bit of a dumpster fire today, down 4.11%, and then MicroStrategy MSTR. But all of this is literally just noise in the grand scheme of things. Now let's quickly go ahead and look at yields. Yields are dropping like a rock. The 10-year yield is breaking below this line right here, this neckline. I think you could probably target these lows right here, 3.8%. That's going to be supportive for equities if this continues. But yields falling does indicate that, hey, there could be some concern under the hood with regards to financials. You can see not constructive candles. As a result of that, TLT, right, the Treasury ETF was up in a very, very big way, and it just keeps making higher highs. I think we can probably go ahead and target the $94 area for TLT, especially if we get the 10-year yield at 3.8, 3.7%. The dollar, I think the dollar is actually just breathing after the move we saw right here. I think we're probably going to see a bit of a pullback here in the dollar, and then we're going to continue to move higher. I think the dollar is going to move higher into the end of the year. I'm very contrarian. It does look like we're forming some form of a very wide base here in the DXY, and I am actually fairly bullish on the US dollar looking out to the year. Let's quickly look at gold, and this is officially becoming concerning. This is like this rally was cool. It's now becoming concerning because what does this tell us about what's happening in the market? And this rally here in gold, this could be the market saying, hey, we probably knew about the issues that we saw in regional banks, and this was the hedge against it. And no pullbacks, no rest for the bears when it comes to this massive move we've seen in gold and silver as well. Both these indices are up like 60% yet today. Absolutely insane, and they just keep ripping like 1 to 2% every single day. Guys, I think this is going to continue, and any dips we do get in these names, you ultimately want to buy those dips. But absolutely insane move. This is capitulation, it looks like. But given the concerns we're seeing in the economy, especially with regional banks, I guess it's warranted, and this is a place where you can actually hedge your bets. But all in all, I think dips to be bought, but not without a little bit of volatility, guys. But if you want what to do first on this channel, we are always going to keep it true and real right here. So go ahead, like and subscribe, guys, to get videos every single day. Guys, and diving into sentiment, this is the AA sentiment survey, and we saw a tick in the opposite direction to what we've seen over the last couple of weeks. Since late September, we've seen a slow tick up here in bullish sentiment and a slow move down in bearish sentiment. Not this week. After some of the tariff news we got from the US and China, we saw bullish sentiment recede, bearish sentiment tick up. This is simply the ebbs and flows we get in the sentiment market. Bearish sentiment looking a little bit frothy, but ultimately, guys, this is what bull markets are made on, and that is pessimism. We should also take into consideration that when we actually look at the second week of October, which we are entering right here, we tend to be fairly bullish, but not as bullish as the first week of October right here. So we can see returns just over 0.5 percentage point, and that generally does coincide with volatility increasing and sentiment, bearish sentiment ticking up as well. But we do have to understand that this market is underpinned by buybacks. A huge portion of buybacks is coming from US stocks. Buyback authorizations are at all-time highs year to date, and this number is going to keep getting bigger because earnings are insanely good, and that is what these companies are using their money for, buying back stock. You can see earnings for this quarter, 9.2% so far. Coming into this earnings season, we were looking for 7.6% in earnings growth. Very solid stuff, led by tech and real estate. Very, very interesting right there. Revenue, technology leading, and real estate up there as well. Rate cuts really starting to have tangible effects in these markets. You love to see that 81% of companies reporting above the analyst expectation. Guys, and as long as earnings are growing, stocks tend to do well in this type of environment. And when we look at the macro, we don't have much for you today, but consensus real GDP growth forecasts are about where they were pre-trade war levels, pre the April trade levels, as you can see right there. Very solid stuff, and we are back to growth. We're in growth mode. That's really good for stocks. Now, tomorrow, guys, the only big name we have reporting is American Express. In terms of data, there isn't really anything, but if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.